Okay, so in the last video I wrote, the question you should be asking is, what should you be investing for? Now, in the world of investing, there are only two possible outcomes you can get from an investment. You can either receive cash flow, or you can receive capital gains. Now I'm going to talk about these two outcomes individually and explain how they work through example. Okay, I'm going to start off by explaining how capital gains works. Since over 90% of investors have their money in the stock market, I might as well use a stock to illustrate how capital gains works. Okay, let's say there's a stock at $20, and you decide to buy it at 20 bucks. You wait for it to go up to $30 and you sell, and you get a nice profit of $10. That's your capital gains, the $10 that you get. Now, how did we get that? It's easy. Just subtract the $30 that you sold it by from the buy price, and you get $10. Now, it is also possible to do the exact opposite, which is to sell at $30 and then buy it back at $20. But that is a very advanced technique that I won't get to until much later on. Just understand that capital gains means that you buy something low and sell it high, or you sell it high and buy it back low. Okay, so now we're going to talk about how cash flow works in the stock market. Now, this is a bit more involved than trying to figure out how capital gains works. Okay, so let's say you have this stock that you buy at 100 bucks, and the yield is 8%. What the yield means is what percentage of your money is being returned after the first year. So in this case, 8% of your money, or $8. But usually, it doesn't come out all at once at the end of the year. In a lot of cases, the dividends will be sent out either monthly or quarterly. So in this case, every 3 months throughout the year, you would receive $2 until you recouped $8 worth of the money you spent. And that is how cash flow works in the stock market. So if somebody were to ask me what they should invest for, my answer will almost always be invest for cash flow. And here's the reason why you're going to want to do that. This is a terrible drawing of a stock chart, but it will have to do to get my point across. You have the $20 stock price right here that goes across. Say you entered the market right here, and you decide that you just want to invest for capital gains. Here's what happens. And this is happening to a lot of people right now, actually. Say you buy that stock here at $20, and you're so happy because it's going up, then all of a sudden it drops back down. And then, of course, you're sad because now you lost some money. And then it comes back up again, all of a sudden, and then you're happy, and then it dives back down again. And then up, and then down. You have all these mood swings because you're making money, then you're losing money, then you're making it, then you're losing it. And you're frozen because you don't know what to do with your money because it just keeps going up and down and you don't know how to react. The only way you're going to be able to make a profit using the capital gains method is to somehow sell above this $20 price line. But more than likely, if you're coming to me asking what you should invest for, I highly doubt that you have the skills or the experience to even recognize when markets are making a downturn or going back up again. Or the technical terms are whether they're bullish or bearish. Whereas if you took the cash flow approach, you just get the $20 stock, or I said $100 stock for my example, but you get the $20 stock, and even as the markets go up and down, you still collect your dividends, which are your cash flow. So it doesn't matter which way the market goes now, you still get to keep making money. Is it a slower process? That's debatable. If you're good at conducting capital gains strategies, it can be much faster. However, if you don't know what you're doing, using the cash flow formula will far surpass any attempts you may make to try to beat the market by trying to sell higher than the price you bought it at. And that is why, if you ask me what you should invest for, I will almost always tell you to invest for cash flow.